How are the moves in Treasuries playing out in the equities picture?
Yeah, so the U.S. bond market continued its sell-off today, sending the 10-year yield to the highest since 2007. The move up that we've seen in yields in recent weeks comes as investors position for higher for longer interest rates. Of course, we've seen economic data show incredible resilience even in the face of aggressive interest rate hikes. But today, interestingly, though, even as yields rose, we saw a rally in technology shares, and that's because investors are overlooking their concerns about a hawkish Federal Reserve and instead focused on excitement around artificial intelligence. We have earnings results from NVIDIA later this week on Wednesday. That is going to make or break the rally that we've seen in the S&P 500. Of course, NVIDIA is up more than 200% this year. It's made up a huge share of the S&P 500's 14% year-to-date gain. So the bar is really high for this company, especially with a lot of analysts on Wall Street revising their expectations for NVIDIA, upping their price targets ahead of earnings results. And we really saw that drive the rebound that we saw in technology shares today.
Alexandra, it's been really a difficult August, as we've talked about. So we're expecting now those 5 months of gains for the S&P 500 to actually end this month. And yet there are few signs of outright bullishness. How torn is the market right now?
Yeah, so Wall Street is very much at a crossroads about what's going to happen with equities in the second half of the year. We have Mike Wilson of Morgan Stanley, who's of course an adamant bear, coming out today and saying that investors, if they begin to doubt economic resilience, that we could see sentiment start to weaken. On the other hand, David Kostin of Goldman Sachs, he actually sees this pullback as being short-lived. He says that hedge funds and mutual funds are positioned in a way that suggests that there's more room for them to boost their equity exposure. And a lot of people that I spoke to, they're not so concerned about this pullback given how overheated the market was. They're actually seeing this as a potential opportunity to step in after they missed out on the rally in the first half of the year. Citigroup Inc. is waiting for the S&P 500 to reach a range of 4,200 to 4,300. They see that as an attractive re-entry point. And HSBC said today that they're waiting for Jackson Hole and a potential sell-off to buy the dip after that happens.